What's up, you guys? My name's Nick, and today I'm going to bring you an update on the value of my Roth IRA portfolio that I have at Vanguard. Now, of course, this is not my entire portfolio. I also have several brokerage accounts with Vanguard, including another joint brokerage account at Vanguard with my wife. I also have a old 401k from working at Vanguard. I have another 401k from my previous job with John Hancock. And then I also have a Coinbase account where I invest in Bitcoin and Ethereum. I invest in real estate, and I also invest in my portable self-storage business. So the Roth IRA makes up a small portion of my portfolio, but I still believe it's extremely important to contribute to. And one of the reasons why I have this segment on my channel is to record the changes in my Roth IRA over time to show the power of compounding. I hope this motivates some young people over time to really take contributing to their IRA seriously at the beginning of their career, because it can really set you up really nicely for a great retirement one day. And maxing out your Roth IRA is honestly not a huge commitment. I mean, once you contribute enough out of each paycheck to max out your traditional or your Roth IRA, it's really not that much money, and probably a lot less than some of your car payments out there. So definitely encourage you to just commit and do it. And that's the purpose of this segment of my channel, is just to show the good, bad, and the ugly of investing in a Roth IRA over a long period of time. Now, my hope is one day, due to the contribution limits and income limits, I won't be able to contribute to my Roth anymore. That'd be a good problem to have, but I don't make enough money yet. So until then, I'm going to record it this way and bring it to you guys. So without further ado, let's hop into my little spreadsheet that I keep. So this spreadsheet here, I actually record in this spreadsheet on a bi-weekly basis, because that's what I'm paid at my job, is bi-weekly. And it's really simple. I just come in here. You'll notice all these dates here in this first column, or the second column rather. This just coincides with the date that I'm paid. So every time I'm paid, I come in here and input the current date. And then in the next column, I actually record the contribution amount. And now, as you'll see, that's $230 a paycheck for me. And the reason I chose $230 is because spread out over the course of a year, when you're paid bi-weekly, you're paid 26 times in a year. So 26 times $230 is almost $6,000, which is the maximum annual contribution amount. It's just shy of $6,000. So what I do is, at the end of the year, I make a little bit larger contribution in one of those paychecks to make sure I hit the full contribution amount for the year. But anyhow, roughly $230. Now, I do save a lot more money than that a year, so I could max out my Roth much sooner in the year. But I like to do it this way because, frankly, I've got a lot of other things I'm trying to invest in, including my storage business, my real estate business, and just my brokerage account. So for me, it's easy just to spread it out over the course of the whole year and just dollar cost average into my investments. So that's what that column is just recording the amount. Then from there, we hop over to the next column, which is the cumulative contributions. And this is just adding up all my contributions over time. So when you look down here at the bottom of the spreadsheet, you'll see that I started my Roth IRA in September of 2019. I should have started it much sooner, frankly. I was 27 years old. I should have been doing it in my early 20s. Now, lucky for me, I was investing back then, just in my taxable brokerage accounts, my real estate, and my storage business. Honestly, I was a little reluctant to contribute to an IRA because I felt like I was locking that money up forever. And, it is a serious time commitment. I mean, the money that you're putting into your IRA, you probably shouldn't be touching for 20, 30, or 40 years. And I realize there are exceptions, especially with a Roth IRA. That's one of the reasons I like the Roth IRA better, is because of the flexibility it provides, the ability to pull out money early for things like a down payment on a house, for education expenses. And of course, you can always pull out your contributions penalty and tax-free, which is a really nice benefit of the Roth IRA. But again, if you're contributing to an IRA of any sort, it's an individual retirement account. It should be retirement money, and therefore you should plan on not touching that money. So I guess that's one of the reasons I was reluctant to get started, but I finally got over that and just started making the commitment to contribute to it every single paycheck and make sure I max it out over the course of my entire career. And I'm going to bring that to you guys. I hope that YouTube's still a big thing in 30 years and I'm still here, showing you guys updates and just the amazing growth that it's had. But we'll see. We'll take it one paycheck at a time. So that's that column. You can see that so far since September of 2019, I've made a total of $9,310 worth of contributions to my Roth IRA. The next column is just the total value on the date. So on 3/26 of 2021, that was my last contribution. I just quickly recorded the value of the Roth that day, and it was $10,345.21. And that's not even closing prices of the market that day. That is simply just whatever the value was when I logged in at that moment, made the contribution. Then over here, this is just a percentage change from last contribution. So since my last contribution made on the 12th of March of 2021, it grew by 1.49%, and that's including my contribution. On the 12th of March, it had grown 4.59% over the previous contribution. And I get that those are not perfect return numbers by any means. Those include my contributions. But it's an interesting number to track that I want to keep track of, is just to see how it's growing each contribution. And then similarly over here on the right in the last column is the difference. This is simply the difference between my total cumulative contributions and the total value on the date, which that would represent my investment returns. That would represent the growth in price and everything in there, and also any dividends I've received. So you can see as of March 26, 2021, that difference was $1,035.21. So that means through price appreciation and dividends, my account has grown by that amount, which is nice to see. Now, if you scroll down and look at the history, you see a lot of red there. And if you notice, I started my Roth IRA at the end of 2019, and then everybody knows what happens in the beginning of 2020. Coronavirus hit and the market plummeted, and that's where you see all this red is almost throughout the entire year of 2020. But it turned out good for me because I was just kept steadily buying, dollar cost averaging through that whole period. And you can see that now here in 2021, the account's turned positive, and I've earned some returns on all of those earlier contributions. So that's pretty much it for that spreadsheet. It's really pretty simple. Over here in the left column, I record the period in which the current period is. So for example, and how I measure that is at the end of every month. I count one full month as a period. So at the end of October 2019, I made several contributions. That was one period. The end of November 2019, several more contributions. That was period 2. And the reason I do that is down here at the bottom of my spreadsheet, I created a couple calculators, if you will. And what I'm doing down here at the bottom is estimating the future amount or the future value of the Roth IRA based on a few different scenarios. So you can see that these three represent three different scenarios. An estimated future balance on September 30th, 2049, at which time I will be age 58.40 years. Estimated future balance on September 30th, 2059, at which point I'll be 68 years. And the estimated future balance on September 30th, 2069, at which point I will be 78 years old if I'm lucky enough to live that long. And then you can see the assumptions I made. I'm assuming a long-term annual interest rate of 8.5%. Some might call that aggressive, some might call that conservative. If you look at the last 80 years or so of the S&P 500, that's conservative. It's actually averaged over 10 or 11% per year. So I don't want to be too low at the 6 or 7% that you see in a lot of places, but I don't want to assume that it's going to be the same that it has been over the last 100 years. So I'm somewhere right in the middle at 8.5%. I also tend to be a little bit more of a riskier investor. I'm 100% invested in stocks. I don't own any bonds. I own some Bitcoin. I'm in real estate. I'm in self-storage. So I'm hoping to earn a little bit higher returns over the longer term for taking on that additional risk. And then this is where the number of periods come in. If you're familiar with these finance formulas at all, the interest rate, the number of periods you plan on investing, the present value, and the payment and the future value are all core inputs of a future value estimate. So you can see that the number of periods is 342. Again, that's based on months. So basically what I did is I took 30 years times 12 months and I minus B91, which is this number right here, the number of periods that have passed. And that's where all of these come in that I was talking about earlier. So these, every time a new period is completed, I copy that number, I plug it down here, and then it automatically updates these tables for me so I can continue to estimate the future value of my investment portfolio based on the number of periods that have passed. So you can see when I'm 58, I'm estimating that the future value of my Roth IRA will be $834,097.62. Over here, if I wait an additional 10 years until I'm 68, the estimated future value of that is $1,500,228. And of course, if I wait until I'm ancient at 78 years old, the estimated future value is $3,593,573, which this shows the power of compounding and the ability to hold off taking money out of the account and continuing to contribute to it. And then finally, right down here, I just have another fun Roth IRA calculator. It's a similar future value estimate, assuming a beginning age of 21, a retirement age of 60, which represents a time period of 39 years. So for 39 years, if you contribute the maximum $6,000 per year at an annual interest rate of 8.5%, you are looking at a portfolio value within your Roth IRA of $1,629,580.85. So that right there is the reason why, if you are graduating college here soon and are about to start on a career, start that Roth IRA. Even if you can't make the maximum contribution, just start it and begin now, because by the time you retire, that's going to be a huge number that can help provide you a very comfortable retirement. And then finally over here on the right, instead of looking at the balances based on whenever I make the contributions like I do over here, this table just simply records the value of my Roth IRA at the end of each month. So on March 31st, 2021, the value of my Roth IRA was $10,444.91, which represented a 10.86% increase over the previous month. On this tab over here, I record the estimated future balances. So going back to these tables down here at the bottom, each time I record a new contribution, I come over to this table and, just for history's sake, record what those estimates were based on a retirement date in 2049, 2059, and 2069, just so I can see how these estimated future values change over time. So you're not going to see a lot of difference period to period, but over time you're going to start seeing a big fluctuation in those numbers based on current returns and the number of periods that have passed and other assumptions. So I just wanted to record that history here just to kind of nerd out. So that's all this page is. And then I don't know why I have this other page where I'm pretty much essentially doing that again. At the end of every month, I record the total contributions I made during that month and then what the ending balance is. So pretty cool, pretty nerdy. It's a very simple spreadsheet. It's not very advanced. It doesn't have any advanced calculations in it. I'm just simply trying to track my contributions over time, the growth over time, and then bring that to you guys here on YouTube so you can see what that looks like. Now, as far as what I actually invest in my Roth IRA, I'm in the process of building anywhere from 3 to 5 core Vanguard ETF or mutual fund positions within my Roth IRA of about $3,000 each. Once I get to those positions within those specific funds, then I'll continue to dollar cost average into each of those funds for the rest of my career and my life, with about 90% of the funds that I put into the account. The other 10% I'll use for fun, buying individual securities, speculating a little bit. But for 90% of all the money that I contribute into there, I'm probably going to just steadily put into these core investment funds that Vanguard offers. And so far, what I have is the Vanguard Information Technology ETF. This is obviously invests in some of the biggest technology companies on the market right now, and it's been a really hot performing fund in the last couple of years. The other one is the Vanguard Real Estate Index Fund Admiral Shares. That's a mutual fund that invests in REITs. The other one is the Vanguard Energy Etf. Now, energy over the last decade has gotten killed, but over the last year, since the depths of the coronavirus, has started to perform much better. And that's really the reason that I bought into it at all, is just because it was at such depressed levels. I thought it would be a good, essentially a short-term investment, buying in near the bottoms, and so far that has paid off. The other core Vanguard fund I'm building a position in is the Vanguard International Dividend Appreciation ETF, so I can get some international exposure to companies that are steadily growing their dividends over time. That's essentially the one that, as of right now, I'm buying into on a bi-weekly basis until I hit that roughly $3,000 mark, and then I will choose another fund and start building that one up. The reason I haven't started contributing to the S&P 500 ETF within my Roth IRA yet is because that's already a big holding in all of my other brokerage accounts. So I just wanted to establish positions in some of these other holdings before I started building that one again. But that will probably be my next one. And then I'll probably choose one other Vanguard account or Vanguard ETF. And then, like I said, once I get to $3,000 to $4,000 in each one of those, and boom, I'll just start dollar cost averaging in each one of those on a bi-weekly basis for the rest of my life. And then as far as some of the individual holdings I have, which are much smaller than the amounts I've mentioned so far, I own CubeSmart. Like I said, I invest in self-storage, Enbridge, Energy Transfer Partnership, Iron Mountain Inc., Magellan Midstream Partners, National Storage Affiliates, Global Self-Storage, and then listed Roundhill Streaming Services and Technology ETF. And then that pretty much makes up my entire Roth IRA account at this time. So right now, Vanguard Real Estate Index Fund Admiral Shares has $4,681 in it. My Vanguard Information Technology ETF is just shy of $3,000. Vanguard International Dividend Appreciation ETF is just a little over $500. Vanguard Energy ETF is a little over $650, and then the rest of the account balance is spread out over those individual holdings. Again, right now, I'm in the process of building the Vanguard International Dividend Appreciation ETF up to a balance of about $3,000 until, at which point I will then choose another Vanguard ETF or mutual fund to start contributing to, and then I will just keep adding to those babies over time. So anyhow, thanks for watching. If any of this was interesting to you, please take a second, subscribe to my channel, smash that like button. I'm going to be bringing more and more videos. I bring videos to you about growing my portable self-storage business, my Roth portfolio, my dividend portfolio, just all my investments, anything entrepreneurial or personal finance I'm extremely passionate about, and that's what this channel is all about. So I would love it if you take a second and hit that subscribe button and come back for more in the future. Thanks for watching.